Secrets channel for learning about trading and investing. Welcome to quick market analysis for tomorrow, March 29, Wednesday 2023. Basically, we'll be looking at what happened in the market today and try to dissect and learn something from it and plan for a better trade for the next day. And here we go in the charts, the daily charts. White range bearish. It's a very clear bearish candle that you can see, and it was taken a support of this previous single edge near to 6950, that zone at Nifty. So real bearishness after that swing high that was made at 7200 nearby. Right. That's what you can make out. And Banknifty, on the contrary, is taking support above the 200 DMA definitively for since the last 7-8 days, and it closes each time above that 200 DMA, but it's unable to move up above the Fibonacci 38 or the 39 750 39 800 above levels. It's facing clear resistance. That's what it shows for the Nifty's daily charts. So let's try to summarize and see what's in favor of the bears and what's in favor of the bulls. Right. So what's the bears? Definitely it's a bearish day. With the closes, not that week, it's straight flat 0.2% only, but overall, basically the attempt to move up failed. That's why you have today white range on Nifty. And this small body is also kind of bearish. You don't know what, the market does not know what to do. That's what the banking index is showing. But it still managed to close positive 0.351. It does as volatile, and it was very volatile towards it, and it finally closed flat, creating a big white range candle, bearish nature on the Nifty, and a long wick candle on the contrary on the Banknifty. Right? It's a failed gap up attempt that was made today. Yesterday also it was a failed attempt. Today also it's a gap up that failed on both indices, and the 17K could not be retained today also. Nifty is still below the 200 EMA, exponential moving average, and just to remind ourselves that we have actually in a downtrend. 11 to 12.1% of correction has happened already in the last 3 months. One of the most underperforming globally also as of now in the short term. Right. And all demand, there is expansion is there, still consolidation is not yet happening in prices. Bearish bias with the below the median, far away from it. Momentum is also bearish in the short term for the Nifty. Banknifty has come out of that temporarily. We don't know how long, but trend indicator ADX also is indicating negative short-term bearish zones, and it's increasing in strength, the trend bearishness. It's a lower high pattern is what is happening on both the indices in the short term. We use indices and selling pressure, and it's trying to move up its descending wedge, and then it had broken down outlook, consolidating for 10 to 12 weeks at the same top of the wedge, and now trying to come back. But it's at a crucial resistance zone at the top of the wedge, you can see. FIs are selling aggressively regardless of what's happening. Even before, there are March they're selling regardless of the bad news on the banks. FIs are selling. Today also they sold, today also they must have sold. So that's a worry. Without the FIs turning back and buying, there's no hope for the market move further up. Right? It's CDI buying that's holding the market from crashing down. Except the pharma and the FMCG, all the major sectors, 6 or 7 sectors, majors if you consider, they're all in the bearish momentum in the short term. So, in fact, today we have some of them, most of them except the pharma and FMCG have fallen down nearly 1% of downfall. So, across the sector, bearishness is there. And the Nifty, it's not just focus on one sector. That's also in favor of the bears, and the OP is still weak, and some gain has happened today. It's still about 82, which is not really cooling off, even though we have some green that came in previous weeks. It's hovering around that 15, which is outside the border of the lower regime, towards the higher regime, close to the 20. So, which is also not that great for the bulls. So these are all the wrap up. Momentum, trend, Bollinger Bands, US markets, filling almost all of the parameters that you consider turn out to be bearish. What's in favor of the bulls? We are at a very crucial support, as you see in the charts. Right, we have the Fibonacci 61 support, gap support, confluence with previous swing low as well, and 16,750 is going to be a major support. Bank Nifty is little quite far down, but for the Nifty it's a major support zone, and it would make a 12% of correction by the if it touches there once again also. So nearly 11 to 12% of correction, so it's reasonable, and then we'll should try to defend that zone, because if that reaches, then we are all the way going down to the 16,000 kind of levels, right? So bulls may defend it, so that's in favor of the bulls. You can say momentum is moving up in the Bank Nifty at least. Bank Nifty again has closed above the 200 EMA for 5-6 days now, and doesn't want to break down. And the weekly charts, higher high is what is happening, higher lower pattern is what is happening. Although the daily is lower low, lower high, so that gives hope for the bulls again. Crude oil is still below the 75, so it's okay as long as it doesn't spike up towards the top of the parallel channel where it is on the weekly. Right, so Bank Nifty is still in the side. So Bank Nifty, many factors are there. About 200 EMA, momentum has picked up. So it's having sideways momentum. It's having a range shift also. Range shift momentum concept. If you don't know, please check the technical analysis playlist items section. You'll have videos on that. So range shift is shifting from the bearish to the bullish. So that's what is happening. It is maintaining the sideways momentum. Also, Nifty also has got a bullish divergence which can work out and then make it climb into the sideways on the bear, so it's a good workout. So momentum wise, there is some divergence that's playing out in favor of bulls. So, but it's not confirmed. It is confirmed. Divergences always, shorter the time frames, it's difficult to get confirmation, but their indication, a warning, and alert. Except the IT stocks, the Nifty and the TCs, all the other heavyweights are like maintaining the sideways one. They're not in the, except the IT, they're not. Others are not. Other heavyweights, the 7 Hrithik stocks are still in the sideways. These are all things in favor. So just to wrap up, based on what we have studied, markets remain weak. It's having selling pressure. It failed to move up after the gap up also on both indices today. It's bearish bar that is formed. It's kind of consolidation and taking a pause close to the 17K for some reason. And what gives bulls the hope is the Bank Nifty definitely. We have seen why 200 EMA momentum, bullish PCR closer 0.87 is what the PCR is. Several factors, indecisive candle, all this, and it gives hope for the bulls and the Bank Nifty is coming for the rescue. Wicks remain high. It's not cooling off. The Fyers are selling. All the other indicators, momentum, trend, volatility, all that, most of them are bearish. In favor of the bearish, because we definitely know there is a lower high pattern that's happening. So it's very difficult to predict that tomorrow it's going to come off. Right? It's absolutely chart wise. This is what the analysis is saying. It's bearish, or also chart indicates, but we have a support zone very close by. We have collected substantially. Banks are trying to not breaking down as the Nifty is doing. All this gives hope that some relief rally could come in if the global market also turns out to be in favor. Let's look at it in medium term. We already had no 250, 7,500 on the upside, 40,000, 40,000, 41,000 on the upside, 950, and downside 16,650, 16,750, 16,800. These are all support zones. 37,386 on the Nifty support zone on the upside, on the downside. For the monthly expiry tomorrow, as per the open interest analysis and what price action is happening, 16,800 and 70,000 is what the levels that we can look out for. Bank Nifty. I haven't checked that, but yeah, primarily Bank Nifty. Let's do that right away. Bank Nifty, the OI is telling that Bank Nifty has got huge resistance, 40,000. So this highest spot rating is at 39,500, and as resistance between 39 and 40,000 is what Bank Nifty could likely to be trading out, right? So that's a summary. That's the market view, and that's the levels for you. And these are things, we know the levels and the resistance support zones where we have to be careful. And that's always protect your capital, play it safe, and when the VIX is spiking up, cut short your portion size if it's spiking above 20. And manage your risk, protect your capital, have hedge positions, and don't take core net risk, and play it safe. Yeah, expiry play, it's like you always have to sell OTMs for OTMs based on the levels that we talked about on the charts, and then have a hedge positions also taken both sides, right? So capital size is according to capital size, position size it. So that's it. Expiry days and exit early. Keep your losses very less. Right? Keep your losses very less and have a re-entry if required, but have forward team selling with hedge positions and tight stop losses if required, right? As per your indicators and support resistance levels. Right? That's it. It's a view, and if you have not subscribed, please subscribe and share with your friends. Appreciate your help in this regard, and put in your feedbacks, comments, and all that. If you want to avail the premium services on Telegram, click on the link in the description. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.